Former CEO of Kellogg Company, Steve Cahillane, has been named the CEO of Kraft Heinz. We have more on this with Erin Lash, Director of Consumer Equity Research at Morningstar. Thanks for joining us today.
Thank you for having me.
So he'll lead the company, but the company's actually splitting into two next year. Which one will he oversee?
He's going to oversee the global sauces, seasonings, and spices business when the split takes place in the second half of 2026.
Okay, but that being said, he will be, I guess, up to his hips in it with the split of the company?
Yes, and he has seemed to indicate that there is the opportunity for change now, meaning opportunities to reincite growth, particularly volume growth, given the strong brand portfolio that Kraft Heinz already operates with.
Okay. Is he, in your mind, the right fit for this role?
He has experience doing exactly what Kraft Heinz needs. Kellogg had been struggling for some time as well. He was able to reinvigorate those brands and also see the business through a split, which took place in in 2023. And that business, both of those businesses have since been acquired for fairly attractive valuations. That's not to say that that's ultimately the course that Kraft Heinz will go down, but he has experience reigniting brands and orchestrating a split, and so he seems like a great fit. In addition, he has more than 30 years of experience in the consumer staples space, which is a vast array of knowledge and experience to draw from.
Okay, so Erin, remind us why the company said it's going to split.
The firm has been challenged to grow volumes, not dissimilar from a number of operators across the space. But there has been an increased appetite for dividing businesses, particularly when shares have languished. We've seen that for the last 10, 15 plus years. And from our vantage point, the opportunity or the motivation is really behind trying to unlock a higher multiple for a more attractive piece of the business, though management contends that it will also afford the opportunity for increased focus and thus the ability to really focus resources, both financial as well as personnel, on the highest return opportunities.
Okay. What I noticed was neither of the new companies are going to carry either the Kraft or the Heinz as part of the name. Why move away from that? I mean, those are the brands that are popular and well known.
So neither of the official brand names or company names, have been announced as of yet. So it's possible there could be a component of Kraft or Heinz mixed in there. But right now, the businesses are being termed in terms of their specialty and their focus, meaning North American grocery and sauces, spices, and seasonings.
Okay. When you pull companies apart this way, I'm just wondering what challenges they're going to face, because when you bring companies together, you look at synergies, you look at savings, and that's good for investors. But when you're pulling them apart and dividing them, what are the challenges moving forward?
It's making sure that execution continues, meaning that they are continuing to get product to shelf and being good partners for the retailers that stock their products, both in physical outlets as well as online. It's making sure that the innovation doesn't miss a beat, that they're still attuned to consumer data and analytics and keeping pace with evolving consumer trends. Not losing focus on the areas and the aspects that truly strengthen that brand and tangible asset is really at the center of what the firm is likely to be focused on as they are dividing these businesses.
Is this a company right now that has been good with innovation, has been good with keeping up with the trends?
I think that there has been fits and starts as it pertains to innovation. There is arguably has been some low-hanging fruit. If you think about Capri Sun, just recently, that product moved away from the pouch and into larger pack sizes, smaller pack sizes, things that have expanded the opportunities from a distribution perspective that hadn't been pursued previously. So that's a great opportunity that likely has more legs. There's also opportunities as it relates to flavor profiles and additional changes in pack sizes across other areas of the business. You know, they've been coming out with new flavor profiles for Kraft mac and cheese. They've been doing so as well as it relates to Philadelphia cream cheese, moving that beyond a spread for bagels and more as an offering that can be used for dips and other occasions. So there still is a wealth of opportunity, it seems like, as it pertains to innovation that will continue to evolve as consumer trends do.
I imagine that the move away from processed food would also be a big challenge for them.
It can be a challenge, absolutely. But if you think about it, Kraft mac and cheese, for instance, removed artificial flavors and colors from their mix about 10 years ago. They ran what they term the largest national blind taste test by not telling anyone for 3 months after launch. Since that time, they haven't done probably the best job of touting the extent to which that product doesn't maintain artificial flavors and colors. But those are our opportunities to continue to refine the portfolio. The other component of that is that consumers sometimes say one thing and want another. And so purchase patterns and intentions don't always match. And consumers sometimes associate a healthier product as tasting worse. And so it behooves Kraft Heinz to ensure that the taste profile of their products maintains, it stays consistent, or risk losing even more volumes if consumers balk.
Yeah. Erin Lash, got to leave it there. Thank you for your time. Erin's Consumer Equity Director of Research at Morningstar Research Services.